What do you just make of that social media post from the president over the weekend calling or kind of talking about potential regime change in Iran? And also, based on reports, how effective do you think these U.S. strikes really were?
Well, thanks for having me on. Look, the effectiveness of the strikes, to take your second question first, I think remains to be seen. From what we saw from the Pentagon, it seems as though the strikes were devastating and that they hit their targets quite precisely. What you wait for, though, in these situations is the bomb damage assessment or the battle damage assessment. And that, since we don't have troops on the ground who can actually go physically look at these sites, that really depends on putting together lots of different pieces of intelligence, signals, intercepts, more satellite imagery, if you can get images from inside the country and so forth, to figure out exactly, what percentage of the stuff at, for example, the deeply buried Fordo site that you're showing, did we get? Did we get all the centrifuges? What happened, quite critically, to the stockpile of enriched uranium and so forth? So that will be coming in days, and it'll be refined, frankly, over weeks as we pick up that kind of information. Look, on regime change, I think President Trump is essentially sending the same kind of message that the Israelis are sending, which is, look, the purpose of these strikes is quite narrow, and the strikes themselves were quite precisely targeted against nuclear facilities only. But Iran has a lot more to lose. It has, obviously, economic targets that could be hit, including energy targets. It has regime targets, including leadership targets that could be hit. This is a way, I think, to deter Iran from contemplating a response against U.S. assets or against U.S. forces in the Gulf by, again, reminding them they have a lot to lose.
And, Michael, by the way, crossing the wires from Reuters, U.S. bombing probably caused very significant damage to underground areas of Iran's Fordo site. So we're going to continue to watch for that. Ed, I want to come over to you. You've given us some research we're going to get to in just a second, but surprised at all by the market reaction? We saw oil actually fractionally lower. Now it has moved higher. The future's kind of muted. We're not seeing any big moves in any particular area.
I think there's a couple things to consider. One is, we had a week of the conflict starting, and the market was down last week. So that reaction has already taken place. And secondly, more importantly, as people had the weekend or part of the weekend to digest the information, the economic impact on the U.S. could be fairly small. The biggest risk is to global oil markets, and that even remains to be seen whether or not the Strait of Hormuz will be closed, which would be the biggest risk. So until we get some more information, the markets have the ability to maybe sit back and see. We've seen several crises over the past several years, and maybe investors have learned maybe not to overreact to any one piece of news. And a bull market since 2009 has taught people to buy the dips for better or for worse, and that could be what's going on as well.
Yeah, we're showing some of your research. We're going to get to it in just a second with you, Ed. Michael, I want to come back over to you. Over the weekend on Meet the Press, Kristen Welker did a really great interview with Vice President J.D. Vance. One of the things she asked about is what exactly is the U.S. red line? And the Vice President said that the red line was the uranium enrichment by Iran. But when she asked specifically about the Strait of Hormuz, he didn't really say that was a red line. In fact, he said that would be up to the Iranians to decide if they want to create disruptions there. Do you actually believe that? Do you think that the U.S. would allow just disruptions in the Strait of Hormuz, considering the impossible impact on the oil market? And then also, what about China?
Well, look, I mean, this is a huge question in the region because, remember, in 2019, during the first Trump administration, Iran attacked Saudi oil facilities. And President Trump essentially said, look, that's not our problem. And that was a real break from U.S. policy for the decades preceding that point. And so I think folks in the region are worried about that if Iran targets energy infrastructure, but not U.S. bases, not U.S. forces, that you wouldn't necessarily see a forceful response by the United States. And you wouldn't see a forceful response even by China, which you asked about, because China, while it would be impacted, tends not to be able to or be interested in projecting force that far afield. And so it would really be up to the countries in the region themselves to deal with. Look, I'm skeptical because I think if there were, something that really affected energy markets, obviously that is a U.S. interest, quite directly that gets impacted, and the government can't simply ignore that. So, yeah.
So, Ed, I want to come over to you, give you the last word. We were just showing some of your research about the impact of the Dow after crisis events in the first 5 trading days. On average, the Dow pulls back about 7%. Then over the next 22 trading days, it rebounds by about 4%. You look at COVID, Russia, Ukraine, the SVB collapse, you see a similar pattern. With this in mind, and you're talking about investors kind of being trained to buy the dip, what sectors would you buy the dip on if you think this pattern is going to hold going forward? Where do you see the opportunities?
So we like growth sectors for the most part. Consumer discretionary is our single favorite, but more broadly, growth over value. With the idea that if this is we had a knee-jerk reaction last week to the conflict, and moving forward, investors kind of clear their heads, and we go back to the world of modest economic growth, slowing earnings growth. So investors pay a premium for those growth stocks that can deliver the earnings. That's where we'd want to be focused on.
So are you talking growth when we're talking about tech, or is there a specific area you're talking about?
Our single favorite area is consumer discretionary. The idea that U.S. consumers is going to remain resilient, but we would not push back too hard if somebody wanted to buy, say, the tech sector or communication services as well.